Welcome back. South Africa is grappling with high interest rates in a bid to control inflation. And risk analysts are warning that there is a need to consider and plan for financial risks behind the country's sluggish economic growth. For more on this, I'm joined by Volker von Widdern, who's the head of strategic risk practice at Riskonet Afrika. Volker, thank you so much for your time and for joining us this afternoon. What, in your opinion, are the main risks that are contributing to not doing business in South Africa amid this weak economic point that the country finds itself in?
I think the principal risks that are reported by many entities in the economic areas are, one, the red tape, or what are the processes of getting money into the country, establishing the infrastructure, protecting that, and then obviously getting a return on your investment, and then you go back to crime, logistics, and other factors like that. So there are significant environmental factors. But overall, if one hears that there are 5,000 mining license applications that have been delayed for 3 or 4 years because the cadastral system was delayed for so long unnecessarily, and so these factors continue. So in each of the industries, there have been significant what's called structural delays or otherwise that have unnecessarily impeded investment in the economy.
And how would you say weak economic growth contributes towards the stability and profitability of those businesses that are operating in the country?
Well, that is a key issue because the economy is internal and external. So if we aren't growing as a country, then the returns on investment on what's already here either go flat or decline, and that reduces people's willingness to invest further because they don't see an additional opportunity. However, there are significant opportunities that can be unlocked if the investment environment is freed up.
And which industries or sectors would you say are more prone?
Yeah, look, we don't comment from that kind of economics point of view, but if you look at South Africa and what's happened in renewable energy, as soon as that restriction was lifted, of course there's a need for energy. Literally billions flowed in and a new industry was created. Similarly, we need significant investments in rail infrastructure. There are many, many mining projects that are available, agriculture, tourism, airways. The big parts of the economy all have significant opportunities that are waiting for one or other key area to be opened up or to be resolved in terms of further development. Another one relates to the motor industry, electrical vehicle development, and the like. So there are many possibilities. The issue is that from a South African point of view, we can't wait unnecessarily long for these opportunities to be initiated and for the money to flow.
And how much lobbying do you believe businesses need to get into in terms of engaging policymakers in stimulating this growth in order for businesses to be able to operate in a conducive environment?
Well, we can call it lobbying, but I think we're saying, what does the country critically need? And we start with COVID, which did happen around the world, but we have been one of the slowest recovering at all. So that was 2020, and now we're in our 5th year of growth that's either negative or flat, in other words, 0.5% to 1%. Yet the population and the needs of the population, through them becoming poorer, so the population grows, and a bigger part of the population's needs also grow because our unemployment has grown substantially since pre-COVID times to now. So the need to spend money in the population has grown massively, about 20% over these last 5 years. So theoretically, our economy should have grown by 20% to support that need, and it's only grown by 2 or 3%. So if you look at lobbying, you're going to say, look, the strategic need and the strategic risk is that we need to massively unlock the economy to get it to grow by 10 or 20% and catch up as quickly as possible. We can't just comment that we're going to manage spending. It's the economic growth and opening up every substantial project that we can. That's the issue for intervention, lobbying, concerted action and the like. The initiatives that we have right now to fix crime, look at logistics, obviously they are very good facilitators of confidence. But unlocking the investments is really what's needed right now to add to the economy.
I mean, they do say that through adversity comes opportunities. Are there any opportunities that businesses are able to take during weak economic times?
Well, we've become more agile and resilient, and perhaps solving. But when if, for example, rail or transport doesn't work in one direction, one tries another. So it does unlock, maybe latent opportunities around the country. But I think that what we're trying to say is, one, we need to recognize as a country that the risk is that we are 20% behind in terms of where we should have been as the size of the economy, and recognizing that the materiality of that should change decision making at the top end, and rather, instead of aiming for 1 or 2% growth, we should be aiming for something completely different. If we then take that opportunity and say, where do we want it to take place, that may be across 5 or 10 industries, and then I think those issues will continue. The difficulty with continuing with the same approach is that we may continue to grow at roughly 1%, and our needs as a country are growing at between 3 and 5% every year. And that will become a very important strategic issue over time, including IMF bailouts and a very unhappy population.
And is there hope in marrying the two? I mean, if we're growing at 3 to 5%, or 1%, and our needs are growing at 3 to 5%, where could we find middle ground? Is there hope?
There is hope when we take these things one, call it strategic solution at a time. So let's say we instead of just borrowing money to fund the tax burden that we have a major infrastructure program that's supported by whichever investors around the world, but they tend to be World Bank, IMF, other related. And if those then go into capital projects, infrastructure projects and the like, you get the benefit of unemployment relief, as well as what we call fixed capital formation, new roads, bridges, factories and the like. And that then has a trickle-down effect into the economy. So if we take one significant project at a time, and that adds scale and that adds momentum, that's how we would try to solve this problem. But the issue is getting those projects going. And if you have thousands of mining licenses in a queue, that's not a great start, but it's actually quite easy to get rid of it by taking a few decisions.
All right. It's all about decision making. Volker, thank you so much for your time. We really appreciate you joining us this afternoon.